Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. And today, pulling the trigger on a stock that I've had my eye on for a while. So we're going to talk about Frontline and its recent merger with Euronav. We're talking about the shipping and tanker market specifically in our stock analysis of today. If you're new to the channel, I'm a popular investor on eToro, and I'm going to be talking about one of the key themes that I see moving into 2023 and how I'm positioning the portfolio for that. So without further ado, guys, disclaimer, of course, anything said on the channel is purely my opinion, and what I am doing doesn't necessarily mean it's a good idea, and it's certainly not to be construed as financial advice. So there's your disclaimer. Go and do your own due diligence or seek the advice of an appropriate professional, not someone on YouTube like myself. Okay, there is an offer, and if you guys click the link in the description, you can also get access to the Options Maverick, which is my private Substack group where Jordan, co-founder, and I share and record every trade that we make, or we give at least one trade that we're giving every week. And so we show you how we have made some regular income that's been able to fund our lifestyle doing that. So it's a lot of fun. There's a free trial, and click the link in the description and it'll take care of the rest. Okay, very straightforward today, guys. I've been in the sauna for a while, so I'm not going to spend too long on the video. I've got a one-page macro breakdown. What's happening in the oil markets? Oil's getting tighter and tighter, and Russian crude has come offline officially, and so unofficially a hell of a lot of it's still being moved around, and that will continue to be the case to some degree, I have no doubt. The question then is what happens to some of these trade routes? So let's take a look. Tanker bull markets really are a sight to behold. They don't last very long necessarily in terms of duration of time, but when they do, you just see this exponential increase in the rates. Today, we're looking at a stock that was a 100-bagger in the previous bull market. I don't expect it to be a 100-bagger in this one for dilution purposes and various other purposes. But it's just to give a reference point historically as to what can happen in a tanker bull market. Here's what you've got to understand. So we've got oil being taken out of the ground in an oil field with rigs and wells, and then we've got the refinery. Okay, so you can't just pull oil out of the ground and put it into your car or put it into an airplane. That's not going to work. You have to take it to a refinery where they heat it up, and then according to various temperatures, certain octane percentages of certain types of oil then get siphoned off. Okay, and then you have like more refined fuels, jet fuel, diesel, and so on and so forth, and you come down the ladder. So how do you get oil from the field to the refinery? That's the big question. And a key part of that answer outside of the US is the tanker market. So we're always using oil, and so we always need oil to be brought from the oil fields to the refineries. Okay, and so tanker transport demand is relatively fixed, but it does come in boom and bust cycles. We're coming off the back of a very bad bust cycle, so there really aren't many tankers left in the fleet, and so you're getting to this point where, again, the supply of available vessels in which to carry the fuels has severely diminished. The high steel prices have meant that a lot of those have been scrapped, thus accelerating the pace of that decline. And we are now seeing to the point where more ships need to be built for lots of different reasons, environmental reasons, regulatory reasons. There are plenty, not the least of which we need more supply to carry the fuel, but you will see that the shipyards cannot take on any new builds until 2025. So we know where the market is going to be in terms of supply, and there's a huge risk that the supply is going to be far less than the demand. And as has been the key theme probably throughout this channel over the last 2 years, has been taking advantage of that, using supply as our North Star and saying, we think that this is going to lead to a squeeze in the rates. And so here's where I'm positioning for the tankers. Now, I was very early in this trade. You may remember I did a video on Scorpio tankers, and I did okay. And then I stupidly sold out of that, and it's since been like a 300% return. So that wasn't very smart on my behalf, but I was early to the thesis. I think that with what I've seen with this Frontline merger, it gives me far more confidence to do that, rather than where I was 2 years earlier, there was a lot of leverage in the bet. So things could have gone asymmetrically well, which they did, but they also could have gone asymmetrically not so well. And I made a decision. In the end, it was a wrong call, an opportunity cost, but we didn't lose out. So in addition, something to point out is the inflation. So you've got higher input costs and rebuild costs. So where you look at the NAV and the book value of these companies, I think they're going to be understated in terms of the replacement cost, because what it costs today to build a tanker is, in my opinion, going to be a hell of a lot more than what it cost a few years ago. So the NAV is likely understated when you look at the accounting of these particular companies. So how do we put this company on a one-pager? Very difficult, actually, in terms of what I've done here is combine the estimated metrics using the merger. It's not going to be accurate, okay? It's not going to be precise by any means. And I think that you could see some large fluctuations, okay? The idea being this company will merge, they'll cut a lot out of the expenditure. How much, I just don't know. And we'll have to wait and see. So I haven't really given them any credit for that. But what I've done is simply take the metrics as of the analyst estimates today and put them together and see, okay, well, what if, and give us a rough idea. And if we can be roughly right, that's far better than being precisely wrong. So the combined revenues, EBITDA, and earnings are listed at the top here, fairly straightforward. Why use earnings? Because of prior year write-downs. Normally, I don't use earnings. It's not the best, but the cash flow is going to be very difficult to work out in the first year. So earnings is still something upon which they will trade, and a lot of institutions will invest using that metric. So I'm going to use earnings today for clarity. Enterprise value expected to be around $5 billion. Currently cash flowing on an enterprise value at 15%, on a market cap that's 25% for Frontline. So, that's quite interesting. I think that a 7 PE based historically is not unreasonable at all. So I'd be looking at a target PE of 7, given that these guys will have the largest tanker fleet in the world upon the end of the merger. So I'm saying, look, if we can get 7 times multiple on the expected earnings, which I think are fairly conservative, actually, I think you'll see them get a lot higher than that. I'm going to use just shy of $30 as a target price. I think that that's very achievable for this company. And so that would be then a 123% on the upside. If we take a look at the price today, that's $13.10 on the close. Your book value combined, and remember, I believe that could very well be understated, so it could be more than that, is $17.6. And so if you listen to my interview with Josh Young, what he likes to do, positioning in his valuations, is to buy something at a big discount to the tangible value, the tangible book value. And so I believe that we can be doing that today with Frontline. And I think that has a lot of upside in terms of potentially trading on earnings, multiples, or cash flows. A few key notes. It's a potential addition for increased ETF ownership. Okay, so it's a small amount of I believe, the Russell. And what happens then is if you get a large influx of institutional capital, it will be automatically dispersed into all of the underlying holdings. And if your stock is one of those, that's usually going to push the price up. So interesting to note, from 02 to 08, Frontline 20x'd, and it also paid out $4.2 billion in dividends. And that's phenomenal considering that it's twice the market cap of the company at the moment. So there've been some figures on Refinitiv saying it was a 90 bagger, which is pretty good. We'll take that every day of the week. And John Friedrichsen, who owned it back then, will own 35% of the company. So we do have adult supervision at the table. So I'm looking to go long the stock. I am tentatively building out a position in the portfolio for maybe 1 to 3%. That can change. I can build on that if I start to see the thesis being confirmed over time. But I'm slowly starting to build the conviction, the position, and then I'll increase the weighting of that position as the conviction continues to build. Cyclical free cash flow is not going to be in there forever. I'm not going to extrapolate this out using a discounted cash flow model for 10 years like I do with other businesses. It's just not appropriate for this, in my opinion. We're here where I believe at the bottom of the CapEx cycle, moving into what I hope will be a bull market for commodities. I think tankers will do very, very well. And when I start hits when I hopefully see that we're hitting some of these target metrics, I'll be exiting. I won't be hanging around to overstay my welcome to the party. And so, yeah, got some options trading on Frontline for regular income and to increase exposure. So make sure you check out the link in the description. And once again, that's what we do. We show the trades that we're doing that we use to gain more regular weekly income to fund our lifestyle. So that's the options Maverick. The link will be in the description. That's all, guys. If you like the value investing style that I put forth, you can copy the portfolio. A link will also be in the description. You can hit me up on Twitter at the ROI channel. And if you enjoy these videos, please do like and subscribe. It helps out the algorithm and helps to spread the word. Wishing you guys a Merry Christmas, coming up to Christmas and New Year. And I'll be back with another video, most likely in a week or so. Thanks, guys. Take care. We'll see you next time.